Alrighty, hey traders, John Howell here, and in today's educational plus also market update video, what I want to cover with you is a bit of a market update. I'll cover the S&P, Dow, Nasdaq, stuff like that, and just a bit of an update, what's going on right there. Also an update on silver and gold, what's going on there right now, and just a quick update for that. Also going to be covering an SLV, but in the SLV, there's actually a powerful pattern that I actually want to teach you, not just a market update, but I'm going to teach you a powerful pattern of how to read the markets, and it's giving us a good sign that something's about to happen in the SLV chart. And I'm going to teach that with you so you can apply this and run with it. And also I'm going to talk to you about the biggest bubble in history, what markets I believe over the next, say, 5 or 6 years or 5 to 10 years are going to be the biggest bubbles in history, so you can sort of be alert of those. I'm also going to be covering USO and oil, what's going on with oil right now, and also covering USO. And then very lastly, I'm going to cover something. I watched an interview recently with Tudor Jones, and it absolutely blew me away about what he said about these markets, where these markets are going, what's going to happen, what's likely to happen, and so much more. So let's get straight into it. Don't place a trade based on what you'll see in this video, because there is no guarantees of making a profit in the market. It takes you a long time to become a good trader. So this video here is just to educate you to become a much better trader. Alrighty traders, if you haven't done so, then make sure you go down to johnsflashsale.com, johnsflashsale.com, to get the $7 trading course. If you're struggling with the trading right now, if you need help with, say, some of the foundational stuff, or the chart reading stuff, or some trading systems, the 2 powerful trading systems, or the mindset, money management, trade management, and mind frame principles, final steps, and so much more, then $7, go get access to that right now. Hey, and heck, even if you don't believe it's worth $7, let me know. I'm happy to refund you $7, right? Just get the help you need. If you're struggling, this is going to get you there. This is going to put you on the right foot moving forward. johnsflashsale.com. Go get that right now. Now, let's actually move into everything that I've actually promised you today. So the first thing that I want to cover with you today is just a quick market update. Now, what's going on with the actual stock market itself? Let me actually bring this over through to here. And what's going on right now with the actual stock market? We can see that we're still in a very, very, very nice sort of upward trend through here. Let me bring up, say, the last 6 months, right? So a very, very, very nice upward trend. We've actually pulled back. We had a nice move up. We came down. And now we're just having a very, very, very nice movement to the upside. We really haven't broken out. Let me actually bring this one up through here. We really haven't broken out of the, we haven't broken down yet. But what I do see, guys, what I do see very, very, very soon is that this whole level here, this whole sort of 2.5 level, is a major, major resistance level for me. And plus, we also have a very, very, very sharp trend line. So if you notice this trend line here that I got on, let me actually bring up another chart here for a minute. All right, cool. I want to bring up, which one? No, not that one. Let me bring up, where are you? I've got so many charts here, don't I? Do I have a 52? All right, yeah, I'm just going to, oh, there it is there. Okay, cool. All right, so I'm just going to bring this up. I'm just going to have the 52 moving average on here, okay? So, but the one thing I'm looking at is that if you notice how we've actually started from here, and we've had a very, very nice move up. So if I draw my trend line from this point through to here, and then I'm drawing this trend line through to here, notice this, okay? Notice how, what I'm doing right now, guys, is I'm trying to get more of not the wicks, but where the open and close, right? Because that's the most important price to the actual stock market, right? It's the open and closes. Notice how we've had this trend line coming out pretty much like that all the way through. Now, why is that important? Actually, I'll keep that there. But notice how we actually had a point through here, and then we've actually stayed above it. We came down, we broke below it once. But look at this here. We held it there, held it there. Look at all the times it held it there, and it held it there. Now, why is that important to us? Because if I bring up now, say, a 3-month view now, or 3 to 4 month view, we know that if this starts to break this trend line through here, that's when the momentum on this upward move is actually slowing down. So that's something that we want to keep an eye on for, to say, okay, once we start to break this, momentum is slowing, and that's when we're probably likely to see a bit of a nice pullback. Again, it's just probably likely to be a pullback, maybe 5 or 6% pullback, and then we're probably likely to hold, and then we're probably likely to go for another move. All right, I'm very, very bullish this year overall in the stock market. There is nothing here to say that we are likely to crash any moment. Remember, guys, a crash takes 12 months, okay? 2008 was 2008. So please don't, if you're trying to pick the top right now, please don't do that, okay? Jump on the trend. I would rather you, if you're trying to get in the market, wait for a nice pullback. It is going to happen, right? Wait for a nice pullback and then buy into it. I prefer you to do that than try to short the market right now, because we never know where the exact intermediate top is going to be. Makes sense? So put the odds on your sides. If we know that we're probably likely to have a good bullish year, wait for a good pullback and buy the dip, right? What is that? What the trend is your friend. Remember, rule number 1 is the trend is your friend. And rule number 2, buy the dip and sell the rip, right? So the trend is up, wait for the dip, buy the dip, sell the rip, okay? Just keep those fundamental things if you're looking to buy some stock or even just buy the indices through there. Makes sense? And the same thing for the S&P 500. If I draw my trend lines now for the S&P 500, you can see how that trend line through there is pretty much what we're looking at. I'd have to use this wick level through here. Let me see if I can do that from there to there. Okay, and we've got from there to there through to there, right? So that'll be probably, all right, I'm going to try and get the most of the touches through here. So I'm going to use that trend line through there. All right. And as you can see, right, we actually found support through. Notice this level through here where we are right now. Let me just like this. That was actually the projection level where I thought it was going to get to. So I don't need that anymore. I don't need that anymore. Up here is a very, very, very long-term monthly trend line. So notice how where we are right now, right? So once again, look at this as what we call like a momentum trend line, okay? And it's a momentum trend line because as it's staying above it, right, the momentum is still up. But if we start to break below it, guess what? Then we're probably likely to see a nice 5 or 6% pullback correction in the market. Everyone's going to freak out. And then remember, rule number 1, trend is your friend. 2, buy the dip, sell the rip. So we're in a good bullish move. Wait for a good dip, then buy the dip and sell the rip with good risk management because we never know what's going to happen. Make sense? So that's what's going on there through there right now. Let me move on now through to silver and gold. Pretty much very, very, very lackluster. Very, very, very lackluster with actually silver and gold right now. Pretty much really nothing going on the short term there. I do see this. We had this very, very, very big move up through here. Now we're not doing much. So it's going to be really interesting to see how long this goes. But the longer this goes sideways, the bigger the move is going to be on the next move, next leg up. We had a nice leg up. We're now just going sideways here. Let me actually bring that down to there. We actually had a nice move up. We've actually had this move sideways with gold. So what's happening right now is that the longer this goes sideways, as long as we get these small bars, the longer it's building that energy, the more it's the more powerful and the longer the next leg up, just like this here, leg up, using energy, legs sideways, building energy, and now it's ready to release it again. Now, and when is it going to release it? We never know. But use that fundamental rule. Same for the S&P, same for the silver, but the silver's a bit more of a wildcat as well too. So as you can see, a very, very, very strong leg up and then just a weak pullback. The longer it goes sideways through here, the more powerful the next move is likely to be on that there. So nothing says we're likely to, nothing on this chart is saying that we're getting ready to start that next move up. We never know how long that's going to be. And so that's what I want to cover there. Now, in conjunction with what I just said there, this is the SLV chart, and I really, really, really want to share something with you that is pretty powerful. Within the market, right, there is buyers and there is sellers, and what I mean by that is that, you've got buyers and sellers, and the strength of those moves gives you a good insight to what the buyers and the sellers are thinking, right? So if we had a buying move that went like that, would you say that that's a very strong buying leg? Right, this is the buyers here. So this is, say, A, one buying leg, or B over here, right? This is A or B. Which one do you think is more stronger? Which one is more dominant with the buyers? Obviously A, right? We had this move up. On the flip side, on that there, if we had a selling period that where the market went down like that, we'd have what? This is A, selling, and then B, we would have a, which one is more stronger, right? A, right? Now, when we start to combine those together, we start to get a pretty good insight to what's going on right now in these markets. And so right now, what do we have? We have a very strong buying leg. So we can see how the buyers are very dominant through here. But then look at this selling leg, right? Pretty much really, really weak, right? All right. We have a very strong buying leg, but now we have weak sellers. So this weak selling period through here says generally when we get strong buyers, weak sellers, we generally get strong buyers again. But we need to wait to see. This is like a bull flag formation, but we need to wait. We need to see a breakout. We need a nice strong breakout first with an increase in volume to say we're now likely to start that next leg up. Right, so it's like a flag formation, but within the flag formation, what's powerful is we're getting this, okay? Strong buyers, weak sellers, and then a very, very, very strong leg up, okay? So a lot of people like to use the flag formation, but within the flag formation, I like to see, within the bullish flag, I like to see a very, very, very strong buying leg, and then the sellers must be very, 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 very weak, and then a good breakout bar, but with an increase in volume. That's telling me we're now likely to start that move up. Make sense? So I hope that makes sense. Now, I want to cover the biggest bubble in history, and I covered this before, but I want to recap this here. There's so many ETFs out there, right? The SLV, we've got, the GLD, we've got the SPY. There's some of the major ETFs. But I truly believe in Michael Burry from The Big Short. He mentioned this as well too, that all these other, it doesn't make sense to me, right? All these other major ETFs out there, and like 2 times leverage and 3 times leverage. There's so many ETFs out there. I just cannot fathom how there's so many out there of how they're going to go when things start to go to the shitter, right? It's like, so to me, I believe, and I'm also backing this up with Michael Burry. Michael Burry says that the ETFs are the biggest bubble in history. I believe that what he's talking about is some of those smaller ones, those 2 and 3 times leverage ones. It's things like, the JNUG, I believe, and all these other ones out there. It's just absolutely crazy about that. And so, I think there was a story last year where a guy lost $3 or $4 million. Like really, he spent like 2 or 3 years building it up, and then literally within like a couple of weeks, he lost it all. If you guys remember that story, leave a comment below. So that could actually happen with the JNUG. So if you're long-term buy and hold the JNUG and stuff like that, all these other long-term 2 and 3 times leverage ETFs, just be careful, because literally overnight, these things could be literally just dropped in half. When things start to go really, really bad. Right now, things are pretty good, but when things go really, really bad with these things, I do not want to be holding. Hence, I don't hold any long term. When I do look at the ETFs, I like to use the SPY and also the SILJ, GLD, stuff like that. You know what I mean? Even like the GDX, the GDXJ. There's some of the major big ones that are probably going to stand the test of time. But these other ones out there, I don't really like it. And if I look at, say, some of the biggest hedge funds out there, say like Ray Dalio actually buys the GLD as well too, right? So if it's good for him, it's good for me. So let's actually continue now through to oil. What's going on with oil right now? So oil right now is just pretty much doing nothing, right? We had a nice rise through here, a move back through here, but notice how choppy this is, right? So choppy with oil. Not really much going on through there. When I start to look at my longer term charts and I start to bring up my trend line, we're still squeezing up into this triangle pattern through here. Now the break is going to be massive, guys. When we do break eventually out of this big massive triangle pattern, look how much we're squeezing up into this level through here. When we do break, we're going to see a big move. And if it is up, my goodness, we are on our way to 110 really quickly. And so bring us off now to the USO. USO is sort of the same thing as well too, right? Pretty much sideways. We have a little bit of support and resistance level through here, but on a bigger picture level, we're pretty much going to stay sideways until we start to really break above this level through here, which is pretty much around about that $16 level through there. Pretty much just nothing going on through here, especially with this USO ETF here. Pretty much just nothing going on for That's at 1, 2, 3, pretty much 4 years and counting. So over 4 years. So once we do start to really break above 16, we're pretty much, that's probably going to be likely to be the whole thing that goes along, right? Because once oil starts to break out of that triangle pattern, like it's squeezing up. Once we break, we're probably going to break hard. We're probably going to see a big move in that direction. Same with the USO as well too, right? Once we break, we're probably likely to make a big move in that direction. Now, on the caveat side, if I do look at this, the break could be actually down as well too, right? We never know where the break is going to be, but if it does break up and above out of this level through here, then we've got a very, very big move coming in oil. But if it breaks down, we're going to have a very quick, I reckon, a very quick and sharp drop down to at least 30 really, really, really quickly. So there's a bit of an update there, guys, and same with the USO as well too. If the USO drops out of that level through there, wow, it's just absolutely just crazy, isn't it? To see what's going on through here. So that's on a bit of a short term, guys. Really not much to say. I wouldn't get involved with the USO right now. Wouldn't touch it because it's very, very volatile, very, very whippy sideways. It's up, down, up, down. There's really no true direction. There is no trend. Remember, so the trend is your friend and buy the dip. There is no trend right now. It's very, very sideways, very, very unpredictable. So I wouldn't touch it right now. And hence I don't have any positions in that. So I hope that makes sense through there. And lastly, guys, what I want to talk about is an interview that I watched with Tudor Jones. And in a nutshell, what he was saying was this. Right now, they have dropped interest rates enough, and the Fed has come in and so on and so forth, enough to really, really let this stock market rip. So what he was saying, which actually really interesting, goes along with what I was saying as well too. I said, get ready for a pullback and then get ready for a continuation. What he was saying is that we're probably likely to see a blow off top, and we have a long way to go yet. We're not at the top yet. We have a long way to go yet. He said, but there's going to be 5 and 6% corrections along the way. And he said, when they start to raise interest rates again, that's when we're getting towards the top. So, now, guys, this guy is a phenomenal trader, right? Ray Dalio is an investor. Tudor Jones is a trader. And I'm telling you right now, guys, every time I listen to this guy, when he starts to really mention things like this, it's just like, wow. It's like you got to listen to him, right? Because he's been through it all, you know what I mean? It's like, so when it comes to trading perspective there. So there you go, guys. That's a bit of a macro outlook for at least the next 12 months. If they're not raising interest rates, we're nowhere near the top in the stock market. Yes, we're likely to see corrections, but we're nowhere near the top in the stock market. So that actually goes, it's really interesting that I watched this interview recently, but I've been saying for the last few weeks, or the last week or so, get ready for a pullback in the stock market. But I believe that's likely to be a really good buying opportunity, and then we're probably likely to see a move and a blow off top. We haven't actually seen a very, very, very big blow off top yet. We've had a nice move up, right? We've had what do we have here? We've had a nice sort of 15% move up, but nothing like a blow off top here. And so it's not even there yet. So that's what I wanted to talk to you about, guys. It really, really, really sort of shocked me and took me by surprise about what he was saying. I was expecting him to say the top's going to be in and all this sort of stuff, but the complete opposite. He said, they've dropped interest rates enough and everything's good and the Fed's come in and all that sort of stuff. And essentially, guys, when they start to raise interest rates again, that's when we're probably likely to see the top in the markets around about that time. So keep an eye on the Fed, and when the Fed does do that, you know what to look for. Very, very simple. But we are going to go through corrections. So every time it does correct, it's probably going to be a very good buying opportunity. Now, there's no guarantees that okay, guys. So, but when you do get in position, make sure you protect yourself, because there's no guarantees of making a profit on any single given one trade. Okay, so be smart around that. Leave a comment below and let me know what you think about the actual overall stock market. What do you think is going to happen this year? According to Tudor Jones, we're probably likely to see a correction soon. But then a blow off top is probably on its way. So get ready for a massive move. And I'm going to be getting in there as well too and having a go at this for the next 12 months. So I'm excited.